Hi, sales ledger control. Let's practice the question. This is the question that we are going to undertake. So if you have your pen and paper, you can pause this video right now and copy down the question or do whatever you do. But this is the question we're going to tackle. Good. So recall, the sales ledger control comprises all of the data that affects the relationship between the business and its credit customers. So we know that we're looking for any data that increases how much the customer owes the business, less any data that reduces how much the customer owes the business. So the items that increase the customer's balance are credit sales, refunds to the customer, interest charged on their overdue accounts, bad debts that they had reinstated, and any dishonored checks. Those will cause the balance either to go up or to remain where they are, but it will not reduce them. On the other hand, the things that will decrease the customer's balance are receipts of cash or checks from these customers, returns of goods, so sales returns, discounts allowed, bad debts that they may have written off, or bad debts that they reinstated and then had them paid, or a set off where the customer is also a supplier and the two agree to cancel out a debt. Now we know that increase less the decrease will give us, yes, someone tell me, will give us what? Yes, it will give us the balance due from the debtors at the end of the period. So let's tackle the question. So I'm going to show you two ways to do this question. One is the traditional approach, we call it horizontal presentation. So remember, in this method, you must remember what to debit and what to credit. And then you have to remember which side is this one you're going to record your debits and the side where you're going to record your credits. All right, so as a quick refresher, we know that assets, when they increase, are debited, and when they decrease, they're credited. Credit customers create debtors. Debtors are assets. Therefore, we will debit those assets when the balances increase, and we're going to credit those debtors if their balances decrease. So whatever decreases the balance, we credit. Whatever increases it, we debit. All right. So I've laid out the traditional style, and I've put in the two balances that we were given at the beginning of December. So we were told that there was a debit balance on the books of $9,200. So this is the balance brought forward. And the sales ledger also had a balance of $220 on the credit side. More than likely somebody returned goods and it was not yet processed. Nevertheless, on the debit side, we're going to put all the items that increases that $9,200. So those items are the credit sales, the refunds, the dishonored checks, interest on overdue accounts, and the restored or reinstated bad debts, as well as the debtor's balance on the sales ledger at the carry down position, that is at the end of the month. So remember, if it's brought forward on the credit side, it's likely to be carried down on the debit side. On the other hand, let's see what will reduce this $9,200. So we see receipts from the cash or checks that the customers would have paid in, sales returns, discounts allowed, bad debts written off, and any set-offs against the sales and purchases. So let's take a quick glance at the question again and see if any of this stuff is here. So when we look at the question, we can see receipts from the customers, sales made during the period, the credit sales. We can see the set-offs, the returns, the dishonored checks, cash receipts from the customers, money that we refunded customers for overpaying, the discounts allowed. Now we know that the sales ledger has the credit balance of 140, but remember, you got to go to the opposite side. And we are trying to find this debit balance, which obviously is going to appear on the credit side of the T account. So back to the, let's start with our little slip. So back to the question, back to our layout. So let's put in this information. So we're going to put in the credit sales and all those things, subtract the debit side from the credit side, or rather take the credits from the debit, and that should give us our balance, which is what we're looking for. All right, so credit sales, the refunds, the dishonored checks, there was no interest overdue, there were no restored bad debts, and the balance carried down at the end of the period. So I put in all those. Now we come to the credit side and we're going to put in the receipts and so on. So I put in the receipts of the cash, the receipts by check. Remember, there were no bad debts recovered or anything of that nature. So the sales returns, the discounts allowed, the bad debts written off. Well, obviously there were none, and hence only the set off against the purchases. Therefore, if I add up my debit side, it comes out to 46,645. Now we know how the double entry works. The total of the debit should equal the total of the credits. So that means I can put that same number over on my credit side, because both sides have to be equal the same. Add up these numbers over here. So a quick addition, let's see, 27 and 4, 31 and 3, 34, 2, 36, 37 and a little bit. Alright, so that, yeah, 37,060, subtract, give us 9,365 as our debtors balance. All right, so that's one method. The other method is the more modern method now, the vertical presentation. In this case, you just need to know what to increase and what to decrease. Sometimes it don't even matter what order you put them in, as long as you add the increases and subtract the decreases. So let's tackle this. So set it back up. Notice what I did. I brought the two balances together, subtract the credit and the debit, and put in one figure. So the 9,200 minus the 220, I put it in as 8,980. So let's put in all the things now that will increase this balance. So the credit sales, the refunds, etc. And we're going to put in all those items that will decrease the balance. So that would be the receipts, the returns, the discounts allowed, the bad debts written off. And at the end, we're going to add on that extra balance carried down from the sales ledger. So I'm going to quickly put in my numbers. So I put in all of the ones that will increase the balance, and I add it up. I get 46,285. Now I'm going to put in those that will decrease the balance. And we know the answer already is 37,060. Subtract it, as I said, increases minus decreases. I get 9,225. I'm going to add back that balance owing at the end, the 140. I'm buying and get 9365, which is the answer to the question. So that's control account. Oh, you have a headache. Well. I know. Just take one of these with a glass of water and your headache will. Bye.